Well, we were mentioning earlier in the broadcast, the expansion of the Trans Mountain pipeline is going to cost more money. We've heard about this over the longer term. $3 billion more than the forecast we had seen in May. The total cost of the federal government-owned project is now estimated at $34 billion, more than 6 times the original projection. I want to get some perspective now from Ryan Bushell of Newhaven Asset Management. Ryan, you have dedicated a lot of your investment dollars to energy infrastructure. What do you make of yet another cost update tied to this expansion?
It's just a sad story, really. You know, this project could have been done a decade ago, and it could have been done for a fraction of the price. It just continues to get worse. Obviously, the pandemic and all of the cost pressures that affected all of us have affected the Trans Mountain pipeline. But this has just been, you know, basically just a terrible story for Canadian taxpayers. Hopefully, we earn some back in terms of tax revenues once this finally comes on stream. But again, we've lost more than a decade where we could have been, you know, profiting from more export opportunities. So I shake my head. You know, there's nothing to say. Operationally,
we wait for the start point. Beyond that, there's the question of who owns this over the long term. The government has talked about, you know, wanting to have, you know, various stakeholders that could be owners of this, including from the Indigenous community. As an investor, how do you think about that? Would you just like to see the start date first, or are you also thinking about the ownership structure longer term?
Yeah, so we own Pembina Pipeline, and that is rumored to be the company that has the best fit. They purchased the rest of Kinder Morgan's assets. Kinder Morgan obviously was the original constructor of this pipeline, or was supposed to be the constructor. So they have some complementary assets. At the same time, though, with LNG Canada coming online and Pembina being one of the biggest gas processors in Canada, and that being a, you know, arguably an even bigger opportunity, they've got their hands full. So, you know, I'm curious to see, just as curious as anyone else, they do a good job partnering with First Nations communities. And so that could be a fit as well, given the government's desire to have them involved. But we'll have to see. You know, it's a big albatross, that $33 billion. None of these companies are going to pay $33 billion for that project. So it will be interesting to see, you know, at what price it goes at and who steps up to buy it.
All right. Now, Pembina is a stock that you brought to the table as an investment idea today because of that LNG opportunity? Or?
Yes, the LNG opportunity. Yeah, exactly. So you know, with the demand for excess gas going offshore, you know, that's going to be dry gas, just methane. But you have the different components of natural gas, ethane, butane, propane, and condensate, which all are processed, separated, and that's creating additional demand for petrochem projects in Western Canada as well. So I just saw a chart this morning from Alticorp, which was quite good, you know, talking about ethane demand rising, you know, by about 30 to 40% in the next 5 years. And all of this just feeds into Pembina's network. They call it the Pembina store. You know, they can do everything for the producer. They can ship it. They can separate it. They can find buyers. They can market it. So, you know, I just think more volumes going through their system. They're collecting a toll. It's a very fee-based structure. They're not exposed to commodity prices. It's just more volumes flowing through their system. You know, with an already 5.7% dividend yield, I think you're going to be pretty happy owning that stock for a long period of time.
Another name on your picks list is Emera, which had quarterly results this week. They fell short of expectations, so the stock took a hit on that one.
Yeah, so, you know, again, very positive on power demand. We're talking about a jurisdiction in Florida where they have a lot of population growth and a lot of demand growth from that population. Cooling demand and cloud computing is another big area. I listened to a podcast recently, Howard Marks' podcast, I don't know if you're familiar, where they were talking about Microsoft's power use doubling with the advent of their partnership with OpenAI. This is something these companies don't really want to talk about, right? You know, I tried to Google it and corroborate it. I couldn't find it because they don't, you know, they saw how, like, let's look at Bitcoin. Bitcoin was vilified by their
image-wise. Exactly, it's not the best thing.
Energy use, exactly, and they've got this squeaky clean ESG image. But power demand is coming. It is coming from cloud computing. It is coming from EVs. It is coming from population growth, and it is coming from reshoring of manufacturing activity. So anybody who owns a utility network that's connecting new sources of power to new users of power and increased electricity flowing through their system, you know, we like those assets. They've been hit by interest rates here short term, but if you're looking out 5, 10, 15 years, I think that this is the most investable trend we have at reasonable valuations. Technology is also a very investable trend, but I'm not sure about the valuations.
I know Elon Musk bought X. I'm surprised he didn't buy a power network. He still could, I guess. So
yeah, especially given all
he's talked a lot about what
especially given
about.
all the Tesla stuff.
And then the final pick on your list is Brookfield Infrastructure.
Yeah, so hit recently. I'm not even really sure why. The results were pretty good. Dividend went up 5 or 6%, I think. Just like the collection of assets for a Canadian investor to own at a relatively, especially in an RSP, to get that full higher yield on the .UN structure. I think it's a no-brainer to own on a long-term basis. You've got Brookfield sourcing and disposing of assets around the globe, different types of infrastructure assets. I think infrastructure, again, is the most investable trend out there. So like this company a lot going forward.
Ryan, great to